A glimmer of hope could actually be in for FNGR after a massive capitulation event. Let's go ahead and find out exactly what I mean within this video. What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with an FNGR technicals and raw price action thread of analysis. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community, ARCa, in Discord. With that said, let's dive right into the charts. Okay, so we are looking at FNGR in the 5-day chart here, which is a very important chart considering what's happening. So we can see something actually that I talk about very often in this channel is the golden rule of three. So we are looking at test number 1, test number 2, and test number 3, followed by a capitulation event, an accumulation of sorts, and then a true breakout attempt on the number 4. Now, it looks like we did get a candle to retrace to test this newly converted resistance into support, but as you can see, the 5-day candle that we're currently on is actually attempting to test this support or validate this support before a continuation onto the upside. And this was the range that we were essentially looking for, and we are closing right almost to that actual support from the range that we were looking at. I'm just going to go ahead and extend it like that. So now this could very well be the test that we were looking for us to finally make sure that this is a valid form of support from the descending channel before a continuation onto the upside. So this is what I mean by a glimmer of hope. We could be looking at a continuation onto the upside since we did verify this. Let's move on to the next chart and see what we have. So if we were to look at the moving averages right over here, this is the 3-day chart. We're going to start going down the time frames so that we can see exactly what's going on. You can see that we actually may have just used the 100-day simple moving average as a form of support. Of course, we do have a little more room here, but if you're a regular viewer of my channel and I tell you that this is the area where we're going to buy or sell or whatever, this is typically what happens. You actually have a take profit zone from shorts a little early, so that they can guarantee and lock in the profits before before covering the position, and this asset moves on to the upside. Also, you do have long positions opening just shy of touching the moving average or whatever technical target. So this is very much expected, and I can tell you that it is potentially the area where it was used already as a form of support. Okay, so yes, the candles are not looking that good right now, but since we are touching some technical supports and validating them, this is actually a very good thing. In the 3-day chart particularly, we have another descending channel, and then this descending channel actually did have the 3 tests and a 4th test with a breakout. If you can actually see real close, this candle actually came right back down, reclaimed the channel, validated the newly converted resistance into support, continued onto the upside, and it's now moving on a new trend. Okay, so this is important for us to be able to identify. Next chart, let's see what we got. Okay, so this is a very important chart that I actually wanted to talk to you guys about. It looks like we are forming a falling wedge right now on the 1-day chart. So the daily chart is suggesting a falling wedge, which they have usually a bullish outlook. So this does have a bullish price objective, and it's usually taken. There's 2 ways to take it. Actually, we can actually take it from the breakout point. So we can take a trend line from that breakout point to the lowest point of the triangle and then applying it to the breakout point to the upside. Another way that's also popular is to take it from the top of the triangle to the lowest point of the triangle and then applying that trend line to the point of breakout wherever it may be, and then that gives us a target, right? If we were to break out around this area here, you can actually see that we are touching the 4.618 and the 1.618, both on a shorter time frame and a longer time frame Fibonacci ratio, which could potentially be $11.62. This, since it's on a daily chart, may take several days for it to realize. A very important fact here is that, first of all, new viewers, you're looking at volatility represented by this indicator BBWP. Okay, anytime that we have reached critical expansive zones, which I consider to be anything above the 90% line right over here. So anytime that we've reached that 90 percentile and started contracting to the downside, we have we could actually see a buildup of volatility and then dispersing it, which is essentially what the volatility BBWP does. It's a metric of the disbursement of returns. Okay, so we are looking at an expansive move again to critical levels. We are approaching critical, so we're at 81.83%. We need to reach the 90, and stochastic momentum, which I have this indicator, which I have actually back tested in many tickers. It's given me an average of about 75 to 90% accuracy in guessing the asset's direction. Okay, so right now it is suggesting a continuation onto the downside, and it would be ideal for it to continue to the downside so that it can actually find a great bounce area and allow this to contract into high volatility so that we can start making a massive move to the upside and a contraction phase backing that volatility or a high number of volatility to come in. Okay, so this is still looking pretty good. The falling wedge that we are forming right now actually did bounce from the trend line, and now we are facing some resistance at this tiny little gap that we actually had made between this candle and this one right over here. Okay, so in the price action that we actually did, we actually covered the gap that we had right here. So, you know, this is from this candle. It still has a little ways to go, so the sentiment may actually want to take it down here and then continue up to the upside. But there is a tiny little gap right over here as well that we have. The good thing is that this gap is on the way up, so sentiment's going to want to, you know, close it. So we don't actually have to close these gaps ever, okay? That's a fallacy. So it's also a farce. Okay, so these gaps can go on without closing forever. Okay, so that's the fact that we have to close it is incorrect. Okay, don't believe anyone that tells you that. Okay, so now the last chart that I want to be able to touch bases on. So let's look at this here. This is the daily chart that I'm looking at, but particular to the RSI. Okay, so we did notice 1, 2, 3, 4 drives of hidden bearish divergence in which it is in play now. So we were able to see this from the top. Okay, so there is the potential to where we're now actually loading or in the process of accumulation before a continuation to the upside. And now let's look at the multi-pane so we can get a better idea as to where we're actually going. Okay, starting from the immediate short-term time frame, let's look at the 30-minute. Let's go in here. Okay, and one more thing actually. For the new viewers, this is my RSI diagram that I've made here. This is the breakdown of the 4 zones that you're looking at within the RSI, 1, 2, 3, 4. So when you hear me mention any of this lingo, you'll be able to tag along. Okay, so the 30-minute immediate short-term time frame is now so much in the shallow areas of the bear strength percentile, which is very likely to be gravitated into bear weakness. This is an aggressive upside suggestion from the immediate short term, so we can see upside almost right away. Okay, so now the buy hourly is also suggesting some upside. It is primed to cross the moving average, and it has since moved outside of the deep areas of the bear strength percentile, which means that the upside is very likely to continue in the buy hourly. Okay, now the 6 hour is suggesting upside. However, we do have to watch out with it's slightly past the shallow area. Okay, so it's still a little closer than not to this downside area here. When we're close to these deep areas, we're likely to be gravitated towards the opposing side. Okay, so it does have an upside pivot, and it is getting close to the point to where it's no longer in the shallow areas. I would give this some credit to the upside, okay? The ones that we have to watch out for are the daily, okay? So the daily is suggesting a continuation to the downside, and it is in bear strength percentile, very much well in the grips of it, okay? So if we are to go back into our charts, there is, let's see. How about this one right here? Yeah, so let's look at the 5-day chart here and put it on the daily, since the daily is giving us that suggestion of downside continuation. And all of these are suggesting upside. So the daily chart does have, I mean, we did break it and we did confirm our newly converted support into resistance before continuing onto the downside and finding support at the descending channel. So, and thus closing the gap, or almost closing it. There is a potential to where we can actually continue on to the upside and using what could have been the trend line of this triangle here before finding a rejection, and then using this gap as a continuation point. So we'll use this to verify a support before continuing on to the upside. So I can see us moving potentially to the, let's take a fib actually from the daily. So we're going to do it from yesterday's range high to today's swing low. And yeah, actually that's pretty much it. The range would be between the 1.618 at $5.49 to the 2 fib at $5.69. That would be the range of resistance before we can come back down and use this as we would validate this as a support before continuing on to the upside. So let's draw. We'll just keep it like this so that we can refer back to this in future videos. So this is going to be our resistance range, and we're likely to find resistance here before a downside move, considering the downside that the daily is suggesting. And if even if we move to the buy daily is suggesting a continuation to the downside. Yep. 3-day is also suggesting a downside. So yeah, we can see some upside for tomorrow's session, potentially by the end of the day before, or mid-session, before we actually find a continuation onto the downside. This could be, in a sense, a little bit of a bull trap. So we just have to watch out. We just have to watch the longs, okay? If you're going to accumulate, know that I am not a financial advisor. Please take whatever I do show and iterate within these videos as a form of entertainment. I can't actually suggest for you to buy or sell any assets. Okay, I need you to do your own DD and we'll be just fine. Okay, so yeah, this can be a bull trap in thinking that we're done. And the shorts gain some liquidity here. They actually open up some short positions for a short-term scalp, and this actually forces stop losses for the longs, and then longs actually open where you're supposed to open and continue on to the upside. Okay, so I do see another test coming after this upside. Short-term upside followed by some downside, followed by some upside. This is a typical A, B, C, D type of pattern. It's a corrective move is what I'm trying to say, but we'll figure it out as we go. I think this is a pretty good place for me to leave off the video. If you have any questions or concerns, don't hesitate to reach out to me within Twitter, on Discord. I'll make sure to leave the links in the description below for you to consider joining the trading community in Discord called ARCa. But with that said, I wish you well, I wish you a good night, and I will catch you at the bell mañana. Adios.